This is Nightly Business Report with Bill Griffith and Sue Herrera.
Bank slump. Investors hoped profit reports from 3 mega banks would give the sector a lift, but today that was not the case.
Big test. Can McDonald's do a better job of containing a possible parasite outbreak than rival Chipotle did?
Behind the wheel, what Aston Martin is doing to find new growth while maintaining its exclusivity. Those stories and more tonight on Nightly Business Report for Friday, July 13th.
And we do bid you a good evening, everybody. Stocks did finish the week higher, but it could have been even better if it hadn't been for the financial sector. 3 big banks, JP Morgan Chase, Citigroup, and Wells Fargo, all kicked off earnings season today. Investors had hopes that the results would be enough to snap that sector out of its recent slump, but that didn't happen. Wells Fargo missed expectations, and despite better than expected earnings from JP Morgan and Citi, investors apparently were convinced that business should have been better. It pressured all 3 stocks in trading today. Leslie Picker has more now on the disappointing day for banks.
3 of the largest banks, JP Morgan, Citigroup, and Wells Fargo, receiving mixed reception from investors today after reporting their second quarter earnings. Wells Fargo's numbers demonstrate it's still climbing out from the years-long scandal over fake accounts that were opened so employees could meet their sales targets. Their revenue and profitability declined during the quarter. The numbers showed particular weakness from mortgage banking thanks to higher interest rates. Citigroup saw some weakness in their consumer banking side with little to no growth in their branded credit cards unit and retail services. The firm saw a bit more strength from the business it does with corporate clients in terms of lending and helping large investors trade equities. JP Morgan's results were a bit more of a bright spot among the banks reporting today. The firm posted record revenue and profit and growth in nearly every metric reported. CEO Jamie Dimon touted what he sees as a strong environment for banking. He says consumers and their companies have money to spend and people are building houses, all of which are positive for JP Morgan and the industry as a whole.
Consumer confidence and business confidence are very high, albeit off their highs, probably because of something like trade. So if you're looking for potholes out there are not a lot of things out there, and growth is accelerating. And, of course, things are always a little bit different.
Both Dimon and Citi's chief financial officer, John Gersbach, said on separate media calls that the trade war has only tangentially affected their businesses because it creates uncertainty for companies. Bank of America, Morgan Stanley, and Goldman Sachs report next week. For Nightly Business Report, I'm Leslie Picker.
Despite those bank earnings, the S&P 500 has its best close since February, breaking back above 2,800. The strength came from the tech sector, with Amazon, Facebook, and Microsoft all hitting new highs. The Dow rose 94 points to 25,019. The Nasdaq rose 2, and the S&P 500 added 3. For the week, all of the major indexes were higher.
But one of the worst performing Dow components today was Johnson & Johnson. A jury hit the company with a $4.7 billion fine, which included $550 million in compensatory damages, which we told you about yesterday. This verdict was in favor of 22 women and their families who said they developed ovarian cancer as a result of using J&J's talc products, which J&J denies. That sent the stock down more than 1% in trading today. Meg Terrell has details now of the verdict and what might come next.
It's the biggest verdict yet in Johnson & Johnson's years-long legal battle over the safety of its talc baby powder. The company's facing more than 9,000 lawsuits over the product, one of its most iconic brands. J&J sells baby powder with talc and also with cornstarch. While natural talc can contain asbestos, all talcum products used in homes in the U.S. have been asbestos-free since the 1970s, according to the American Cancer Society. J&J disputes the claims, saying the science shows its products are safe. The American Cancer Society says the data on talc powder and cancer are mixed, and if there is an increased risk, it's likely to be very small.
What's happening is that the courts haven't caught up to the science. And this isn't the first time that that's happened in the history of American the legal system.
J&J has successfully appealed a number of talc verdicts, including a $417 million verdict in Los Angeles last year. That was the largest until this week. J&J plans to appeal this verdict as well. An attorney for the plaintiffs says J&J should stop selling the talc products or put a warning label on them. J&J's attorney says it wouldn't be appropriate to put a warning on a product that doesn't cause cancer. For Nightly Business Report, I'm Meg Terrell.
Shares of McDonald's were also lower after health experts say they're examining a possible link between the restaurant's salads and an intestinal parasite. We told you about it last night, and today the stock was off a fraction. But the question for investors is, will McDonald's be able to contain the damage better than Chipotle did when it faced a similar issue? Kate Rogers takes a look.
More than 100 people in 2 states have been hit with cyclosporiasis, an intestinal foodborne illness possibly linked to salads at McDonald's restaurants. The Illinois and Iowa Departments of Public Health are currently investigating a potential connection. A quarter of the cases in Illinois had reported eating salads from McDonald's in the days before they became ill. In a statement, McDonald's said, "Out of an abundance of caution, we decided to voluntarily stop selling salads at impacted restaurants until we can switch to another lettuce blend supplier. We are in the process of removing existing salad blend from identified restaurants and distribution centers, which includes approximately 3,000 of our U.S. restaurants primarily located in the Midwest." The company has been in the midst of a turnaround under CEO Steve Easterbrook, who took the helm in 2015. Earnings last quarter beat expectations, luring customers in with value promotions and menu innovations, including fresh beef. But foodborne illness can be a challenge for national chains. Look no further than Chipotle, which was plagued with issues surrounding food safety for years before bringing on a new CEO and regaining public trust.
It also appears that McDonald's has at least identified the batch of lettuce that was affected here, taken the steps to remove it from the restaurants and the supply chain. As long as we don't see any other situations pop up and the company can effectively communicate what happened and put in place preventative measures, I think that the company will at least have somewhat of a more mild impact than, say, a Chipotle.
The illness is potentially presenting a new test for McDonald's and the CEO, who's launched a successful turnaround for the iconic brand. For Nightly Business Report, I'm Kate Rogers in New York City.
The Papa John's fallout is intensifying. Today, the pizza chain said it's going to remove founder John Schnatter's face from its marketing materials. And now the sports world is distancing itself from the company. The New York Yankees are suspending their relationship with the chain. The Texas Rangers have suspended their marketing deal, and the University of Louisville is dropping Papa John's name from its sports stadium. Papa John's founder resigned as chairman on Wednesday, hours after he apologized for using a racial slur during a conference call.
The Justice Department appeal of AT&T's acquisition of Time Warner, quote, changes nothing. So says AT&T CEO Randall Stephenson, who added that the merger is closed and that AT&T owns Time Warner.
The merits of the case have been tried. 25 million pages of documents, testimony in a trial, an extensive trial, and an extensive order. So at the end of the day, we feel like the law is on our side. We feel good about where we are, and we think the appellate court will look at it on the merits of the law.
But shares fell in trading today, and Raymond James cut its rating on the company to neutral, telling clients the DOJ appeal is a negative catalyst for the stock.
The Federal Reserve is downplaying the impact of trade wars on the economy. In its semi-annual report to Congress, which will be delivered next week, the central bank says that economic activity is solid and the labor market is strengthening. The report did note some lingering concerns like slow wage growth, and it said the current path of monetary policy is enough to handle any trade-related issues that might arise.
But trade fears did hit consumer sentiment. The University of Michigan survey fell to a 6-month low on rising fears of an all-out trade war. The biggest concerns were voiced by Americans whose incomes rank in the top third of all households. Despite the decline, confidence overall remains historically high thanks to steady job growth.
Import prices unexpectedly fell last month, marking the biggest decline we've seen in about a year and a half. The index dipped 0.4% in June thanks to a decline in the cost of imported oil and natural gas. Economists say that the drop was likely temporary given the tariffs recently imposed by the Trump administration on lumber, steel, and aluminum imports.
Tariffs and the threat of new ones could impact activity at the nation's busiest port. And that is where Aditi Roy is for us tonight.
The Port of Los Angeles is the busiest in the country, and China is its biggest trading partner. Last year alone, about $145 billion worth of goods shuttled between the world's two largest economies through this entry point, which makes the Port of LA on the front lines of the trade war.
Most of the folks that we shop with, Costco, Walmart, Lowe's, Home Depot.
Gene Soroka is the executive director. He says, ironically, one of the first impacts of the tariffs appears to be an increase in imports because businesses are rushing their goods in before more tariffs take effect. A new report shows imports nationally were at an all-time high for June, and they project another record month in July. Soroka also says once the tariff effects trickle down, they could impact 15% of goods moving through here and put at risk 240,000 jobs nationally. As a result, he wants the president to rethink his trade strategy.
We fully support fair trade and investment rules to make our U.S. companies competitive, but let's go about this where we have a level of certainty and we can continue to pump through all of this great cargo in the supply chain that is so important to our nation's economy.
Stephen Chung is the president of LA's World Trade Center. He says since trade tensions have erupted, he's been getting calls from executives around the country who are worried about tariffs. Chung says since half of the imports coming through here end up in other parts of the country, the tariff impact isn't just a local problem.
We're the #1 manufacturing center in the United States with over 350,000 manufacturing jobs right here. And these products get exported internationally. And so when the tariffs are hitting, it's going to impact the way we're able to export and sell our products to the international market. So it's more than just trade and logistics.
Soroka says not knowing what will happen next in the trade conflict is the hardest part.
I think the uncertainty doesn't play well in our industry.
The uncertainty comes at a busy time of year. Retailers, including Walmart, Target, and Costco, are importing a lot of goods from China as demand ramps up for the back-to-school shopping season. For Nightly Business Report, I'm Aditi Roy at the Port of Los Angeles.
Time to take a look at some of today's upgrades and downgrades, and we begin tonight with Blackrock. Their shares were upgraded to outperform from market perform at Keefe, Bruyette and Woods. The analyst there says that shares of the world's largest asset manager deserve a premium valuation because of its leadership position. Price target there now $590. Shares rose a fraction today to $507.09. VF Corp was upgraded to buy from underperform at Bank of America Merrill Lynch. The analyst cites increased momentum that should continue through the back-to-school sales season. Price target $96. The stock rose 1% to $84.84. And Domino's Pizza's price target was raised to $305 a share at Oppenheimer. That firm is predicting growth in comp store sales. Rating remains at outperform. Stock rose in today's session to $281.40.
Still ahead, a news conference, tea, and protests that defined the presidential visit with one of our closest economic allies. President Trump is reportedly considering selling oil from the nation's emergency stockpile. According to Bloomberg, the options include a small sale of 5 million barrels, I should say, and a larger offering of 30 million. The president has reportedly expressed frustration at the rise in oil and gas prices. Domestic crude settled today at about $71 a barrel.
Well, the president's controversial visit to the UK included a news conference today with Prime Minister Theresa May and tea with Queen Elizabeth, all while protesters filled the streets. Our Wilfred Frost is in London for us tonight.
It's been a roller coaster few days for the president in the United Kingdom. The big question coming into the visit, was he willing to offer the UK a free trade deal once Brexit has happened? Late last night, a bombshell interview he gave to the Sun newspaper seemed to suggest the answer to that was no. He even criticised the Prime Minister's negotiating tactics with the EU. Then today, he softened his position.
The only thing I ask of Theresa is that we make sure we can trade, that we don't have any restrictions, because we want to trade with the UK, and the UK wants to trade with us. We're by far their biggest trading partner, and we have just a tremendous opportunity to double, triple, quadruple that.
There will be no limit to the possibility of us doing trade deals around the rest of the world once we leave the European Union on the basis of the agreement that was made here at Chequers and that I've put forward to the European Union.
So Trump and May seem to agree now on trade. Whether or not Theresa May can convince her own party of her plan for Brexit remains to be seen. From Chequers, the president went on to Windsor Castle for tea with Her Majesty the Queen. Of course, Her Majesty has no hard power, but what she has in abundance is wisdom and respect. She also has impartiality. The president is the 12th president to meet the Queen. There have been 7 Republicans and 5 Democrats. She does not take sides. And it is that mixture of independence and respect that she will have used to try and get a message really across to the president from her Prime Minister, Theresa May. Now, that positive development only tells half of the story. The other half is protests, and there was a record turnout here in the UK for protests against a visiting leader. The protests were addressed as well by the leader of the opposition Labour Party, Jeremy Corbyn, who thanked the attendees for their belief in hope, democracy and unity. For Nightly Business Report in London, I'm Wilfred Frost.
Now the president is in Scotland for the weekend. He's there for a golf holiday, and then he heads to Helsinki for a summit, of course, with President Vladimir Putin of Russia. And today, ahead of that meeting, Special Counsel Robert Mueller charged 12 Russian intelligence officers with hacking Democrats during the 2016 election. The 11-count indictment includes charges of conspiracy, money laundering, and attempts to break into state election boards and other government agencies.
Amazon sends shockwaves through another sector, and that is where we begin tonight's market focus. Amazon already manages cloud computing data centers. Now, tech website The Information reports the e-commerce giant is looking into creating its own network switches within the next 18 months. Amazon rose nearly 1% to $1,813.03, but the news sent shares of several networking companies falling on the fear of Amazon's potential entry into that space. Xerox is reportedly considering selling its debt-ridden leasing unit to make itself more attractive to potential buyers. Reuters says the company shed nearly $4 billion in debt if it sells that division responsible for lending money to prospective customers. Xerox has been exploring strategic options after it ended its $6 billion sale to Japan's Fujifilm. Xerox rose a fraction to $25.27.
Information technology firm Infosys reported a less than expected rise in profits and weaker sales growth in its financial services division. The company did say that demand remains strong and it expects to meet its 2018 financial outlook, but shares did fall nearly 3% to $19.42 in today's trade. And Northrop Grumman's chairman and CEO Wes Bush says he plans to step down from his role in January 1st of next year. Bush does remain as chairman, though, through July of next year. Shares of Northrop Grumman were down a fraction to $321.73.
This week's Market Monitor is finding opportunity in the U.S. and is recommending ETFs that he says pay a good income. The last time he was on in January, he picked the iShares Technology ETF, which is up 7%. The Vanguard Total World Stock Index less the U.S., which is down 15%, and the Vanguard Emerging Market Index, which is lower by 10%. Joining us once again is John Merrill, Chief Investment Officer of Tanglewood Total Wealth Management. Welcome back. Nice to see you again. Let me start, before we get to the new picks that you have, I'd like to address the Vanguard Total World Stock Index, which is down 15%, and the Vanguard Emerging Market Index, which is lower by 10%. Do you still hold those? Did you add to the positions on the decline? Where do you stand?
First, I don't think the VEU is down 15% from when I was on. It's probably down closer to 5%, from when I was on last time. But to answer your question directly, we have reduced our international holdings by about 20%, but I still do own a big position in the VEU. We have totally sold out of the emerging markets. And that comes back to the one theme that I brought up in talking with your producer, which is domestic over international. The introduction of the U.S. corporate tax reform just totally upended the synchronized global growth that we had going into this year that we had assumed would continue into 2018. U.S. corporations are very fortunate. They have had a cash windfall from not only the lower corporate rates, but also bringing money back from offshore. And they can use this money for new investment, for expansion, buybacks, dividends. And this is an advantage that foreign competitors simply don't have. And that's kind of overwhelmed the markets this year.
Forgive me, though, John. You didn't see that the tax reform package would give American companies that kind of advantage? I mean, that was the whole idea behind those tax cuts.
Well, that's a good point, Bill. You know, it was past December 22nd. We knew it would have an impact on earnings. We knew domestic stocks would do well. So right as we entered the year, we did lower to neutral our international weightings, which actually at the end of last year had been overweight because of the valuation discrepancy. But I guess, yes, we missed the magnitude of the change and how it would ripple through the foreign markets. We knew it would be an advantage to domestic stocks. We didn't really quite realize, you're right, until maybe February and March, just how this was going to actually take away from some of the foreign competitors.
Well, let's take a look at what you're recommending this time around for us, John. First up is the iShares 1 to 3 year Treasury bond. The symbol is SHY. Ultra safe income, you say?
Exactly. You know, a couple of years ago, if you would have bought a 1 or 2 or 3 year Treasury bond, you'd have got exactly almost zero. The Fed has been raising short-term rates, and now you can get literally almost 2.5% on a 2 year Treasury. That's only about 35 basis points less than what you get on a 10-year Treasury for a heck of a lot less risk. So we look at the short-term part of the Treasury market as the sweet spot for risk and reward.
The other two, and just in the interest of time, I'll mention them both here. You're looking at a master limited partnership from JP Morgan and the REIT index from Vanguard. Clearly, you're looking for income down the road as the Fed's raising rates. But you're convinced that rates aren't going to go up that much down the road. Why?
Well, it's just like we've experienced the last 2 years. The Fed's been raising short-term rates, but intermediate and longer-term rates have been very sluggish and have not moved up in lockstep with the short-term rates. And we believe that's because there's a lot of big factors that are affecting inflation and interest rates, forces like aging demographics, like the transparency brought on by the internet, things like that. Right now we have more aggregate debt in the world than we've ever had before. All that debt has to be serviced. That puts enormous pressure on rates.
On that note, John, thank you so much for joining us once again.
Absolutely. Glad to be here.
Read more about John's picks, you can head to our website, nbr.com.
And coming up, the road ahead of an ultra-luxury car that is very much in demand.
It is the brand driven by James Bond. Now Aston Martin is looking at a future that will include more models and potentially more investors. That story coming up on Nightly Business Report.
Ultra-luxury auto sales are on pace for another record year, and one brand in demand is Aston Martin. In fact, the company that builds the cars driven by James Bond has posted record revenue and is setting the stage for a potential IPO. Phil LeBeau takes us for a spin in Gaydon, England, where handmade craftsmanship and performance sports cars come together.
Aston Martin is on a roll. The British automaker known for ultra-luxury performance models like the DB11 is enjoying a surge in demand as it expands its lineup, rolling out 7 new models over the next 7 years.
We're going through a huge renaissance here with the Second Century Plan. Naturally, you're seeing a significant increase in the basic value of the company, and obviously my shareholders are pretty pleased about that.
From the first ride at a royal wedding, to the tricked-out cars driven by James Bond, to a unique ad campaign with quarterback Tom Brady, Aston Martin has always had plenty of cachet. What it's lacked has been consistent growth. But under CEO Andy Palmer, that is changing. Sales last year topped 5,000 vehicles for the first time in a decade. Revenue topped $1 billion for the first time ever. And Aston Martin is steadily expanding its lineup, including an SUV.
But that expansion, along with plans to build electric cars, will require heavy investments, which is why Aston Martin is weighing a potential IPO.
It's a very attractive time to go public if you're Aston Martin. Stock markets are trading at very high multiples. There's an enormous amount of capital, investors looking for unique investment ideas, and Aston Martin is a unique investment idea.
As attractive as Aston Martin is to both drivers and investors, it also comes with a huge question mark. How much will it be hurt by trade disputes that could add tens of thousands of dollars to the cars being exported from England?
There isn't a natural competitor for our cars in the US, so if you want an Aston Martin, you're going to buy an Aston Martin, almost irrespective of the price.
Aston Martin looking to double sales while protecting its air of exclusivity. Phil LeBeau, Nightly Business Report, Gaydon, England.
Finally tonight, the last blockbuster standing. There will soon be just one remaining location of the iconic American video rental chain. It's in Bend, Oregon. 2 other Blockbuster stores in Alaska are set to close on Sunday. The general manager of the Oregon location credits her store's longevity to amazing and loyal customers. And speaking of which, one of our former producers, Jim Connor, is one of those, and he sent us those pictures there.
Thank you, Jim. That does it for us tonight. Thanks for joining us. I'm Sue Herrera.
I'm Bill Griffith. Have a great weekend. See you Monday.